Hello and welcome to the Bow Valley Nonprofit Speaker Series on Endowment Fund Development. I'm going to give a couple seconds to let a few more people join in before we get started. In the meantime, if you'd like to introduce yourself in the chat box and include also the nonprofit that you're associated with, that would be great. All right, so we're just going to get started now. If you're just joining us, please introduce yourself in the chat box and include the nonprofit you're associated with. And welcome to the Bow Valley Nonprofit Speaker Series on Endowment Fund Development. Thank you so much for joining us today. The Bow Valley is located on the traditional territories of the Blackfoot, Tsuut'ina, Stoney Nakoda First Nations, Métis Nation Region 3, and all of the people who make their homes in this Treaty 7 region of Southern Alberta. Before we get started, I'd like to share a few housekeeping tips. We've been getting around 20 participants to each of these sessions, and your participation to the sessions makes it more engaging. So if you have any questions, feel free to enter them in the chat box. And if we have time at the end of the session, we'll certainly address as many of those questions as we can. If you have a question that's maybe a bit more specific or technical or specific to your organization, we'll also be providing email addresses for the panelists and speaker so that you can reach out to them directly. Please stay around to the end of the webinar. There's a short survey which helps inform future sessions, and we'll also send that link out by email too. So a huge thank you to Tara and Ruth at FCSS at the towns of Canmore and Banff for sponsoring these webinar events. I'm honored to introduce our speaker and panel today. Joining us is speaker Kristen Pauch-Nolin, Executive Director of Canmore and Area Healthcare Foundation. And our panel, so I'm going to introduce each one of them in turn. So Kristen has worked in the not-for-profit sector for over 25 years and has a deep-rooted understanding of how charitable organizations operate and why they're important. She's a leader that values collaboration and the engagement of stakeholders in all projects. Kristen is an artist and a teacher, as well as implementing her creative skills and aptitude for learning and sharing her knowledge in all of her work. We also have Jolene Cashin, who's a CPA and CA partner at Kenway, Mac, Archuk, Stewart, LPP Chartered Professional Accountants. As a CPA, Jolene provides a variety of services to her clients, including accounting, auditing, entrepreneurial tax, business advisory, and cloud accounting solutions to a diverse client base. She has experience working with owner-managed businesses in various industries. Jolene also provides services to many local charities and not-for-profit organizations that support the community. Providing her expertise to these organizations and their board members is important to Jolene, and she takes great pride in being a resource for others. Also joining us is Divya Jokas, Director, Campaign and Major Gifts at Banff Center for the Arts and Creativity. Diva is a certified fundraising executive with extensive experience in public relations, marketing, and communications. She's worked in the not-for-profit sector in Alberta for the past 20 years. Diva has held senior capital campaign and operational fundraising leadership roles in arts and culture, as well as health nationally. Originally from Toronto, she is an honors graduate of Ryerson University Arts Administration Program. Recent highlights have been working with national arts organizations to lift the lifetime cap on the federal endowment incentives program, working with philanthropist Jenny Belsberg to build the new 650-seat Jenny Belsberg Theatre at Banff Center, exceeding fundraising targets for the past 5 years, including during COVID, and leading a vital endowment redirection campaign at the height of the pandemic. Also joining us a little bit later is Michelle Rode, Director of Community Engagement at YWCA. Michelle joined the YWCA Banff team in July as the Director of Community Engagement. Michelle holds a BA in International Relations from the University of Calgary and has a public relations certificate from Mount Royal University. Her areas of expertise include community relations, fund development, and affordable housing. Michelle has worked in leadership roles with various nonprofit organizations for the past 15 years. Her most recent role was helping launch the REST program in 2021, a winter program in Canmore. My name is Moselle Dibden, and now let's welcome Kristen and the panel. Oh, you're just muted there.
I'm going to take myself off mute. Hello, everyone. Thank you, Moselle. And I was just watching the chat, and it looks like a wonderful representation of organizations from across the Valley. So thank you, everyone, for attending. And of course, thank you to my wonderful panelists for lending their expertise to this subject. So today we are going to talk about endowments and give you a little insight where we have not a lot of time. So this is going to be pretty kind of down and dirty, just kind of straightforward, give you the facts. And then, as Moselle said, if you have more in-depth questions, then we will be providing everyone's contact information so that you can reach out at the end. So I'm going to get us started, and then I'm going to throw it over to the other panelists, and we're going to save questions until the end, if that's all right. So the first thing that I wanted to do was sort of set the stage by talking about how not-for-profit organizations across sectors makes up their revenue complement. So different organizations need to figure out how to, get money in the door, what those sources are to offset their expenses or the costs to do the work that they want to do to fulfill their missions and mandates. So, of course, endowments reside within that revenue complement, but I thought that it was important to talk about what the complement is, and it changes depending on what kind of organization you are, but there are some similarities. So most not-for-profits do have a mix of revenue sources, so their money comes in from various places. So those can be from individual donors, they can be from other foundations, they can be from corporations, also government funds. So it could be municipal, provincial, federal, or some mishmash of that. And then finally, earned revenue. So I'm going to talk about a little, again, just brushing the surface of what each one of those budget lines might be on the revenue side. So individual donors can be high-level donors or what we call major donors. They could be mid to low-level donors or regular donors. So these could be donors that provide funds annually and predictably. They could be donors that send you a one-time gift. So there's a mix of those. Foundations and other organizations, for example, family foundations, sometimes will have grant programs or other sources of funding that provide funds to foundations and other not-for-profit organizations. There's corporate money, so corporate giving. Corporations give money to not-for-profits in a variety of ways. Some of them have foundations, some of them have grants, and sometimes those are targeted grants. So for example, the Canmore and Area Healthcare Foundation just received a grant from CP Rail through a program called CP Has Heart, which are funds directed towards cardiac care in communities. So that's an example. The other is in-kind support. So that may not be a contribution of funds, but could be a contribution of services, for example. And then there's government funding. So government funding can come municipally, provincially, federally, or from all of those sources. And again, government has opportunities for what we call operating funding, which is money that comes in to offset the costs of running the organization, or it can be a directed project fund that supports a specific activity that the organization is taking part in. And some government agencies provide both operating and specific project funding. And then there are other sources of revenue, for example, the sales of goods and services. So for example, a museum might charge admission fees, a theater or an arts organization might charge ticket sales or rent their venues if they have a theater, for example. Member-driven organizations sell memberships, so you can, purchase an annual membership to that organization. Educational institutions and training institutions have programs that they run. So we think about Arts Place. They have classes that they run that you pay to attend. And then there are endowments, so which brings us to the topic of the day. So not all organizations have endowments. Some are have long-standing. So many hospitals, universities often have endowments, but that's not to say that other organizations don't have them as well. And that's really, as I say, the topic for today. So, which brings us to what are endowments, and why would you want one in your revenue mix? Or, why should you consider one? Why should you not? Or how do you see one entering your revenue mix in the future? So endowments are assets. So they're permanently restricted assets. They're usually cash accounts that are invested in equities or bonds or other investment vehicles that can be added to over time. So the original asset grows because income comes in and tops up the initial investment. So this, when we talk about endowments, we're really talking about the long game. So these are funds that are invested. And if we think about like a savings account, then we put the money in and the interest on that savings is income, it's revenue. So that's in very simple terms that Jolene is going to find a better description of, but that's sort of the, the nuts and bolts of how it works. So the growth of the endowment and the annual income is what we rely on. And the goal of most organizations with endowments is to allow that initial investment to grow and not to pull from it, but again, to let the interest, then the earned interest, contribute to the revenue profile each year. So endowment funds are those which are considered often restricted. So there are different kinds of endowments and the restrictions vary. So sometimes when the funds come in, they are completely restricted, which means that they really are very purpose driven and that you can't just kind of use them for whatever you want. Those restrictions can be relaxed over a period of time, or they may be forever. So when we talk about restricted funds, I've used the term and someone said, I have no idea what that means. So an unrestricted fund is one that can be used, as I say, for a lot of different things. So it can be used for your operations, it can be used for your programs, it can be used for whatever you need it to do. A restricted fund, however, means that there's rules attached to it. So the donor or the contributor of those funds has an idea of what they want them to be used for, and they don't want you to have the discretion to just use them for, whatever you need to use them for in that moment. They have an idea and they've told you what you need to use them for. So as I say, there are different kinds of endowments, and I can provide you with more information if you're interested. So you're going to see words like true endowments, you're going to see terms like quasi-endowments, and then term endowments. And those, again, relate to the restrictions that are put on those endowments, or the rules that kind of govern their use. So when you decide that it's time to create an endowment, or you're interested in going down that path, there are guiding principles and documents that need to be in place to make sure that those funds are administered in a way that meets those restrictions, that you're following the rules, and that they're clear, and that everyone understands what those are. So what is the specific purpose? And if the donor doesn't have those restrictions, then often your board will place restrictions on those funds as well. So now, a lot of people, when we bring up endowments, and even when I was sort of mentioning to various people that I was meeting with over the past month, that I was going to be talking about endowments, a lot of people are like, whoa, you know, that's kind of a scary word or a scary concept, or they think that only really, really big organizations have endowments. And that's not the case. You don't have to have enormous first investments into your endowment. Sometimes they start off smaller and then grow over time, because again, it's about the long game. It's about the health of the organization long term. The other thing is that people sort of expressed, well, I don't know how to administer those funds. I don't get it. And I will tell you that most nonprofits choose to hire a professional or an investment firm to help them out. And this is the perfect segue for me to throw it over to my lovely friend Jolene, who is an accountant and can help us with some of the sort of mechanics, how this kind of works and lives and is reported on in your audited statements. So I will introduce Jolene. Moselle already gave you her a little bit about her background, but I will throw it over to her and thank her again for taking part.
Thank you, Kristen. Good afternoon, everybody. Thanks for inviting me to speak today to discuss endowments from an accountant's perspective. I'll try not to get too technical here on everybody. So I just want to start by saying that endowment accounting can be complex. And so my goal of the presentation today is really to provide an overview of some of the accounting concepts as it relates to endowments. The first question that we hear from our clients is, I just received $100,000 endowment from my organization. What do I do with it and how do I record it? And my simple answer is, well, it depends. The accounting for endowments is dependent on a number of factors. So the type of the endowment received, which Kristen talked a little bit about the different types, the restrictions that are imposed by the donor, what they want to see happen with that endowment, and the organization's accounting policy for recognition of contributions. The other factor is whether the endowments are going to be held by a third party. So those are some of the questions I would ask before I would respond to my client's question about how and what to do with it. So the first decision when you get that endowment, your organization does, is how do you want to administer the endowment? So there's two different ways. You can internally administer it or manage it, or you can do it externally. So if the organization chooses to administer the endowment internally, that would mean that you take that $100,000 endowment that was received and deposit it into an investment account held under your organization's name. We recommend that this account would be held with a trusted financial advisor at a financial institution, and not a relative of a board member or an RBC direct investment account where you're investing in Amazon shares or whatever you think is going to be the next best investment decision. So we also recommend that the investment policies are developed and in proper internal controls are also in place, and those should all be approved by your board. So what does that mean, investment policies? So what percentage mix are going to be in GICs? What's going to be in bonds, ETFs? What risk level or risk tolerance is everybody in the board comfortable with if it's not specified by the donor? We also recommend that separate accounts, if you're administering it internally, that separate accounts are set up for each endowment so that you can easily track and appropriately allocate the investment income according to its restriction. For example, if you have income earned from the $100,000 endowment that was received and the donor requested that this be spent on youth programming for the organization, then the income earned on this particular account can be transferred regularly to assist with these expenses. When the endowments are internally administered through an investment account, these would be presented as restricted assets at their fair market value on the audited financial statements, on the statement of financial position, or as most people would call it, the balance sheet. Another option is organizations may choose to have a foundation assist with administering their endowment funds. So some organizations that I'm aware of and some of my clients have used the Banff Canmore Community Foundation, the Calgary Foundation, the Edmonton Community Foundation, just to name a few. And so in this case, if you received the $100,000 endowment, you would provide that to the external foundation who would hold the funds for perpetuity for your organization. The authority and the disbursement of those funds and the investment income all rests and is controlled by that foundation. The accumulated funds then are generally not presented on your organization's audited statement of financial position, but instead would be disclosed in the financial statements. And I'll discuss a little bit about that later in my presentation. So some of the benefits and why we see a lot of organizations putting their endowment funds with an external foundation are they really get to benefit from the investment expertise that that foundation has developed. They've got their own controls in place and really just continuity and consistency of those endowment funds beyond what a board term would be or an investment advisor's career. So just really great for consistency and also just additional security and protection that future board members won't make a decision to try and borrow or withdraw from that investment account on a rainy day. So the second question that my clients say is, okay, I received it. I've decided to internally or externally administer it. Now, how do I record it in the books? And so for some of you, you might say, oh, I don't care. I'll just ask my accountant. But for others who are accountants, they're going to need to know how to record this. And so each type of contribution is accounted for differently, and it really lies in accordance with your organization's policy. Organizations can choose to either use the deferral method or the restricted fund method. And if you aren't sure what your organization uses, you can always refer to your notes to your financial statements, the ones that nobody reads, page 4 and on, or just ask your accountant. So under the deferral method, since the endowments are to be maintained permanently and not to be used or be available to fund operating expenses, that contribution would never be recognized as revenue, but instead it would be recognized as a direct increase to the net assets in the year received. The investment income earned on the endowments would then be accounted for according to the nature of the restriction imposed. However, if your organization uses the restricted fund method, then the endowment contributions are recognized as revenue of the endowment fund in the current period. So the third question is, okay, so I've done that, and how am I going to account for the investment income earned? So the net investment income would include interest, dividends, realized gains and losses, as well as unrealized, less you probably have some brokerage fees as well, or some sort of management fee. Whether it's internal or external, there's always fees to be had. So that net investment income earned on the endowment funds would be accounted for according to the nature of the donor restrictions imposed. So so the key is it's important to understand from the donor how the investment income is allowed to be used. And I think Kristen mentioned a little bit about this too. So what do they want you to use that investment income on? Is it for operating expenses, certain programs, capital improvements, or is it to be added to the principal and not to be used for another 5 or 10 years? The net investment income is not externally restricted. If it's not externally restricted, then it'd be recognized as revenue in the statement of operations in the year earned. And that investment income, whether it's externally or internally, should be recognized on a regular basis. So now that we've talked about administering the endowments, how to record them, the next item is what should be disclosed in the annual financial statements. So the key is to be as transparent as possible with your users, your members, and anybody, your funders that's going to be looking at the financial statements. So the financial statements should include the organization's accounting policies for their endowments, the net investment income earned from the endowments and how it was recognized. And when the endowment funds are held externally, for example, you've used the Calgary Foundation to hold your endowment funds, then additional disclosures are required because that fair market value is not sitting on your balance sheet as assets or restricted assets. So you would have a note that would explain who's holding, so the name of the foundation holding the funds, the endowment funds contributed during the year, the distributions that were, so if there's income and the foundation then distributed back $2,000 during the year or whatever that number is, and also the fair market value of the endowment funds held at the financial statement date. So that sort of is a very broad, brief summary. Tried not to get too technical here, but some of the key takeaways that I just wanted to conclude on here is that, and Kristen mentioned as well, endowment funds are restricted and should not be treated as operating or contingency reserves. These funds cannot be spent, not even during a pandemic. So, but don't be scared of them. Endowments are a really great way to provide a steady annual income to support the organization's community activities and really to ensure longevity of the organization. And, ensure to talk to your accountant when it comes time to determining how to properly report and disclose the endowments in your financial statements. And I guess if I have one more minute here, while it's not, specifically talking about endowments, I just wanted to briefly mention, while I don't have a lot of time to discuss here, but happy to discuss later, is just a reminder of the compliance matters to just kind of draw to your attention. So it's really important to understand what your organization's annual reporting requirements might look like. So if you're a registered charity, then you'd be required to file a T3010 charity information return 6 months after the year end. If you're a not-for-profit, you may be required to file a T1044 nonprofit organization information return. These are due 6 months after the year end. And certainly we work with our clients to make sure that the endowments would be reported appropriately. And if there's any, disbursement quotas that need to be met, lots of different items that goes along with that. So feel free to reach out to me if you have any questions specific to your organization. I believe my contact information will be handed out. That's it for me.
Thank you, Jolene. So you know, what I took from Jolene was, again, a reminder that endowments are an asset, and that they're an option in terms of the mix of how you fund your organization and its activities. And most importantly, make sure that you have a good accountant. And that, like Jolene, they are clear and can help you navigate and be in compliance with the CRA, because that is very, very important. And reporting out, of course, to your community and your stakeholders. Next, we have Diva Jokas, and Diva's going to talk about, so now you have sort of an idea of what an endowment is, and you know that, okay, you know, this can be the long game. I can, you know, start small, and this is what I'm going to need to do to report on the money. So you're like, okay, I'm in, I'm going to start this. Diva's going to talk about how to fundraise for an endowment. So thank you, and over to Diva.
Thanks, Kristen, and thanks, Jolene. So I'm going to talk about kind of quickly 7 topics related to fundraising for endowment. Current use versus a long horizon restricted that we've talked about. The unique message in your case for support or case statement. What kind of person typically gives to an endowment. What you really need to begin the fundraising, what you don't want to do, other considerations, and then obviously thinking about what you need to talk to donors or prospects about endowment. So I've created some session notes, so don't worry about taking any notes right now. They'll be provided after the fact, including a couple of helpful articles that's on fundraising for endowment. And so now you're kind of thinking about this. Remember that there's a lot to do before you even get to the first ask. So just reminding that this is probably something that is going to take a lot of thought and planning. So let's dive in. So today versus tomorrow, smaller organizations may want to focus on their current use fundraising in their general and their annual campaigns before thinking about endowment fundraising. It may also be worth considering that if you don't already have a planned giving program, that you look at building this capacity either prior to or in conjunction with an endowment campaign. I'll talk a little bit about why that is later. It is debatable whether or not the threat of cannibalizing your annual fundraising efforts on a new project like endowment. There's different trains of thought there because, you know, you don't want to hinder the revenue gained from your existing programmatic or operational support for this new aspect of your fundraising. So that being said, it should be thought of as a really separate campaign with very targeted prospects that may not actually be the donors in your annual campaign. And I'll talk a little bit about the profile of an endowment donor in a bit. So, you know, what's going to give you some indications that you might be ready for this? If you're seeing strong fundraising results year over year, and you're seeing a large influx of new donors that consistently renew year over year, that might be one indication, in addition to having a planned giving program set up, that you might be ready to explore endowment. So that might just be, watch out for those pieces. So the long game. So endowment fundraising is really different from your regular fundraising. The case is pretty simple. It allows people to give now for an impact forever. And the reason why that's different in your annual fundraising is because the case that you're making is that you need the money now to be able to offer the programs and provide the support in the community that you need, that those problems are right in front of your face. So it's really important that this case that you're making is very different, and it's going to have a long lasting effect. So there's a lot about kind of enduring legacy here in the case for support, and a real sense of kind of immortality. So that might be challenging if you're addressing pressing needs today. So for example, you're a homeless foundation and you're about sheltering people. So it's hard to square that circle. So you really need to think effectively about how you're going to message that with your donors. Organizations really need to demonstrate various enduring aspects to the prospective donor. A consistent need that transcends time, wide-reaching aspects of your mission that won't go away if the problem is solved. So I always use the case of cancer research, right? The cancer research money needs to be made today, but even if we solved kind of cancer, in a broad sense, you'd still have people who are living with cancer who need the support. So that talks to, even though you've solved one aspect of the problem, you're still going to have community members who are facing that, who are going to need support. So that's just an example. A strong governance model. So I think Jolene talked about kind of your fiduciary responsibilities and kind of risk assessment, and making sure that you have advisors and experts. And then a long history of balance sheets and fiscal position. So whether that's within your organization or through a community-led foundation that you're providing that, it's really important for the donor to understand that you have that bench strength. You're also going to need to know your impact. So what kind of outcomes are the donors going to see? And that's in the years to come and 10 years from now and going even further. So you really need to kind of think about what that impact is going to be further down the line. So then what kind of person is going to give to endowment? These are some general terms. So, I'm not trying to kind of like pin people in here, because you're going to have people on either end of the spectrum. But the donor motivated to give to endowment typically has a focus on legacy building. So they'll likely have thought very deeply about their enduring legacy in the community. They'll likely give from a significant asset base and not from their regular income. So that gives you a distinction that it's probably not the people who are giving through your annual campaign. So just thinking that way, they may likely have dependents out of the home, or those dependents are already taken care of. They may be motivated by government matching campaigns that leverage this type of giving to charitable organizations. So you're going to need to be able to speak to that if asked. So for example, there are foundations out there that give exclusively to endowment. There are federal and provincial programs that leverage this kind of support, or other philanthropists who are motivated to match these kind of contributions. You want to make sure that the donor can make a contribution later down the road, whether that's from their annual income or their asset base or in a bequest. You want to be able to ensure that they can give throughout their lifetime to the endowment. Loyalty is always a good indicator of possible interest. So if I was looking at a donor who had 5 years of giving history with my organization versus someone who had 30, I'd probably choose the person who had 30 years worth of donation history with my organization as an endowment donor. So the must-haves, obviously strategic plan, long-term goals, a senior leadership group that's driving these efforts. These volunteers need to be able to give to the campaign if they are soliciting support from others in your community. That's really important. Obviously, your board buy-in. You need to be clear on what the endowment will support, and likely a goal, potentially a feasibility study if you can reach that goal. Remember that, the goal that you set is going to have to be a bit of a game changer for your organization. If you're raising $1 million a year through annual support and you make a goal of $250,000 in endowment, that may not be a game-changing number for the donor. It's going to have to really be aspirational. So there's a balance there about making something that is aspirational and game-changing for your organization. Obviously, the case for support or the case statement or your prospectus, whatever you want to call it, a campaign plan, some strong support from some key people. Usually you want to make sure that you have top prospects for those leadership gifts in order to make your campaign successful. And, you know, it's debatable, this number from a percentage standpoint, but the best way to publicly launch an endowment is to have at least 50% of the money already in the door. And the goal already raised. So, you know, that's a lot of work to be done before you're actually even talking to the majority of the community about the campaign. Gift acceptance policies are really important. And then obviously the administration to support the fundraising. It's one thing to outsource your accounting advice and your investment advice, but do you even have the resources internally to be able to steward the donor, to report back on the work, to be able to make pledge agreements that might actually be over multiple years, that might be using things like bequests or stocks, gifts of stocks and security? You need to be able to have that resource internally or access to that resource in order to even be able to accept those gifts. So quickly on the don'ts, don't fundraise until you're ready, always. And you know, sometimes if you have a gift that surprisingly arrives at your door, you should have gift acceptance policies to understand if you can even accept those gifts. Don't publicly make any statements about your campaign until you've raised, 50% of your goal or around that amount. So that you can set yourself up for success. And always don't assume. Use people like Jolene. Check with your legal and accounting advisors because that's really important. Of course, somebody's phoning my phone right now. Other considerations, donors may want to mobilize their network to give if you talk to them about this campaign. So this might mean for your organization, meaning having capability for individuals to fundraise on your behalf. So do you have turnkey solutions to be able to enable this kind of giving? So someone makes a gift to endowment, they want to ask all their friends to give to the endowment that they've established. Do you have the capability to be able to respond to that type of giving? Do you have the stewardship and the staff resources to be able to report back on the progress and the impact of this effort? That's really important to consider. Donors will expect you to communicate with them and over a long time frame. So you have to be able to resource that internally. And then keep restrictions to a minimum. Start broad and then fine tune if the donor is requiring you to get a finer pencil on that. You need to find the common ground between the donor and your organization. You need to ensure that you're protecting your organization's mission and priorities quite far into the future. So that might mean actually providing a lot of flexibility so that when we're all gone, and meaning retired and living on the beach in Mexico, hopefully, that people who are running that organization and the volunteers who are serving the board are not with their hands tied. So it's really important to think about making that endowment purpose as flexible as possible for the people who are going to be leading the organization in the future. So finally, a couple things just on donor visits. As you get to the point that you're ready to start asking for gifts for this, it's going to take a few visits. You're not going to go into the first meeting and be like, and so we're going to ask you for $100,000 for an endowment. It's going to take a little bit of time to cultivate that donor. It's going to require a number of meetings. So you want to have a goal for every visit. If that's just as simple as trying to get another meeting, or communicating some aspect of your programming, that's important for you to be able to understand. You always want to ask questions and listen more than you talk. So 80% of the time you should be hearing the donor speak and really only you talking for about 20, if less, because you're going to learn more about the donor by doing that, as opposed to talking about your organization. All of those things will come, but it's really important to learn about the donor's objectives. Make sure you take notes, use visual aids where you can, handle objections. So you're going to need to think about questions that the donor may ask that might be difficult. And so do think about those in advance. Write down your response and be able to answer those questions of the donor, and think of the hard questions that they might ask. That's always really good time spent. And ask more questions, and then obviously recap. The donor wants to understand what the next steps are going to be. And so it's important to recap some of the action items, what the follow-up would be, and what they can expect from you and your organization as you kind of conclude that meeting. So those are just a few things, and some of the handouts go into a bit more detail. So I'll maybe wrap there.
Thank you, Diva. So wonderful presentation, a wonderful reminder of the importance of planning, the importance of, engaging your board, making sure that policies are in place, and thinking about a fundraising plan. Also importantly, and Diva has provided some wonderful resources about the different kinds of fundraising, the process of fundraising. So if some of those terms like stewardship are new to you, that the resources provided will give you that story and give you some confidence as well. So our final panelist is Michelle Road. She is with the YWCA in Banff. And she's going to talk about a local example of an organization that has an endowment and how that came to be and the details of it. So I will throw it over to Michelle with great thanks for her participating in the panel.
Thank you, Kristen. Hi, everyone. For those who I don't know, yes, I'm Michelle Road, and I'm the Director of Community Engagement for the Y. Fairly new role. I joined in July. So I will share that this endowment fund that I'm going to talk about actually was set up before I started. So a lot of the information I'll be sharing is based on conversations with the folks who helped set it up. It's also based on, my notes are based on an agreement we have with the Banff Canmore Community Foundation. I'll talk a little bit about that, and some of our press releases. So what I thought I would do is just do a little bit of an overview. I think I've got 5 slides on our endowment fund, and then I will talk a little bit about how we work with our amazing donor, and I'll just do a screen share here and start that. And I will say I'm learning so much about endowment funds. I'm certainly not an expert in that, nor an accountant. So thank you everyone for that. Let me just share this here. I've got about 6 screens open, so this works. I hope you don't get my text here. Okay, there we go. Okay, can everyone see that? I know we always ask that and everybody can see it. Okay, great. So a little bit about the why. I think that most of you can probably, let's just minimize that. There we go. Most of you are probably familiar with the organization, but we're a community-based organization with over 100 years of experience in the Bow Valley. We're governed by a volunteer board of directors, and our organization shapes a safe, inclusive community that empowers women and their community for a better future. Our vision is a thriving, equitable society. A little bit about our endowment fund. So our fund is the Dr. Priscilla Wilson Changemaker Endowment Fund, a bit of a longer name there. It is our first endowment fund, which might come as a surprise given how long the organization's been around. And I think it was very much in line with the discussion what was had earlier around, there's always an immediate need, there's shelter needs, there's things like that. And sometimes it's hard to think about long-term planning. This was an opportunity that came to us, and it was with a long-standing relationship with the Wilson family. They're an incredible family. I've spoken with them, and they're very down to earth and approachable, and really care about our mission and our mandate, which is really wonderful. It aligns with our values, which was important to us. The fund was created by the Wilson family to honor Dr. Priscilla Wilson and advance women's leadership and equity in the Bow Valley. So just a little bit about Dr. Wilson. I've got some notes here. And unfortunately, I didn't know her, but I know a lot of folks did, and she made quite an impact in the community. And she left a really unique legacy in Banff. She was the first female doctor in town, as well as an inspirational mentor, role model, and friend to so many. And she was known as the Queen of the Rockies. And I asked the family about this, and they know this, and they're supportive of it. And it was a name given to her by a friend who was visiting in Banff, and named her the Queen of the Rockies. And it's a fitting title for her. She was really quite an inspirational individual and woman in our community. So in 2016, she was recognized by the Y as a Bow Valley Woman of Distinction for her significant contributions to the community. As I mentioned, it's our first endowment fund, and we did have an existing relationship with the family. So good to hear that that's something that we often see with endowment funds. The fund was established with a $240,000 donation from the Wilson family in this April of this year, and we are looking to grow that fund. An additional $30,000 was raised by the Y in Banff in Dr. Wilson's name, and that was mostly friends of the family who want to contribute after her passing. The endowment is held and managed by the Banff Canmore Community Foundation, a wonderful organization with lots of knowledge and expertise. And I'm not just saying that because Lori's on the call here, but really they have so many resources and so much information. I can't say enough. So really good resource there. And it was set up as a separate and restricted fund through the BCCF. So what BCCF will do is pool the initial capital of the endowment with funds of similar terms. They'll invest and administer the endowment in accordance with their bylaws and investment policies. And it was really important to the YWC in Banff to partner with a local nonprofit organization on this. We certainly have a great relationship with the Calgary Foundation. When I asked Ebony, our CEO, about this, it was really about looking to a local partnership and looking to invest locally. The funds will be invested and stewarded for the long term. The initial capital, as you've all heard, will stay intact. This is very common with these funds. And the investment income will go towards specific initiatives. And this I'll talk a little bit about in the conversations I've had with the donor. The specific initiatives revolve around leadership development and gender equity initiatives for women in the Bow Valley. The first year, we're looking at likely pulling in less than $10,000 in investment, but that fund will grow and support future programs and initiatives long past when we're around and I'm on a beach in Mexico. And this also offers predictable and sustainable funding. As we know, with government funding or grants, things can go up and down. So this is a really wonderful way to have sustainable funding. One initiative we've already launched is the Dr. Priscilla Wilson Changemaker Award, and that's awarded every year. It was established in 2019. And this award recognizes a woman in the Bow Valley who's making or has made a meaningful difference in the community. I'll just talk a little bit about, there we go. Okay, that worked. Technology sometimes works. And so I'll just talk a little bit about our donor. So yes, they came to us, but they are a longstanding donor, and we had a really strong relationship with the Wilson family. And we do have immediate needs. Of course, we have a campaign running right now through the holidays. Let's hope for the holidays. That is more to do with our immediate needs. And there's different language that we use around that with our shelter and how we can support our residents and clients. We also talk with donors, especially long-term donors, about the long-term need. And I just had a lunch with a long-term donor the other day and talked about, with Ebony, talked with this donor about what our long-term needs look like, where our growth is, where our opportunity is. And that's where those conversations start happening. And then, at some point you hope that the donor and you can have a conversation about, well, what does that look like? And how can we contribute if they're passionate about your work? And it really is for us, looking at, shared values is always really important for us as an organization. And we are a little bit selective, and maybe that's something that fundraisers will have some input on around how we partner. And this was just a really natural match for us, natural fit. So the funds that I will talk a little bit about this. It can often be a legacy fund, and that's what you heard from Diva. So thank you, Diva, for confirming that. We've had lots of support from families in the past, including the Wilson family, and that's where the opportunity to talk about really making a long-lasting impact that Priscilla would have hopefully been quite proud of, and that's really important to us. The terms that we have with the family as well as BCCF are very clearly laid out. We have I read through all of the agreements we have, and I'm not a finance person. We have a very strong finance person, and we have a legal agreement with the family and also with BCCF. That's a separate agreement. So in these agreements, we set out the terms, we set out what can we use the money for. We do keep it broad. We talk about women in the community and having an impact that way, and so that down the road there is an opportunity if we need to shift, but at no point does it say we'll pay for shelter out of this or operations. So really making sure that we've heard from the donor and the family on what's important to them and what they want to see long term. It's an ongoing partnership, and we have been very careful to honor their wishes as we go forward, and we speak to them on a regular basis. I was just on a call with them recently, and we provide an annual report and regular communications with them. So I do agree. I think you need some time to steward this properly, and not to say that you need to do it every day, but the family by all means has the right to be updated on what's happening with their family funds and how we're honoring Priscilla the best way we can. So we're also looking at some other opportunities with the family going forward and how we can continue to honor Priscilla and the very generous donation that's been given to us. So I guess that's all I have at this point. And if you have questions, I'm happy to talk about it. Again, not an expert, but if somebody wants to reach out to me, I think my contact information will be there, and I could talk a little bit more detail when we have more time about the agreements we have in place and then our communications with the family. They did give me permission to share the details I shared today. So yeah, I hope that helps.
Thank you, Michelle. I know that we're just about at time, Moselle, but I would just like to recap a little bit of what Michelle had to offer. So it's a wonderful example of an organization in the Bow Valley that worked with a family, as Diva said, to bring that gift to honor both the organization's mission and mandate and the wishes of the donor, how the initial investment was restricted, and how the proceeds, which can be accessed, are also restricted and used in accordance with the mission mandate of the organization and the wishes of the donor. And also how the YWCA works with the Banff Canmore Community Foundation to administer those funds in relationship with their financial people, that Jolene so beautifully explained how that process works as well. So thank you to all of my panelists. You're all wonderful and so knowledgeable and eloquent, so thank you. And I will throw it back over to Moselle.
Thank you all so much for sharing all your insights and information today. That was such a great session. I really, really appreciate your time and your knowledge. Thank you so much. And we'll share your contact information in a follow-up email. But yeah, thank you so much for that. It was fantastic. And to everyone listening, please save the date for our next session. We're taking a break in December. So we'll be back on January 25th. And our speaker series then will focus on board governance. So you won't want to miss this session. It's with Caroline Campbell, who's the president and CEO of Norquest College. But yeah, thank you all so much for joining me today. And I'll be sending a follow-up email as well as with the recording of this presentation. Thank you so much to Kristen and to our panel. Thanks, everyone.